Hello and welcome to Markets View at Deven Choksey, your daily market podcast where we decode the Indian financial markets. Let's take a look at what's happening with the global market and start with GIFT Nifty, of course, as GIFT Nifty is trading with a premium of more than 50 points from Nifty futures on a Thursday close, indicating a start in the green for the domestic markets. The Asian markets this morning are mixed as Japan's third quarter GDP revised downward. India rate decision is awaited. So economic indicative action is what is impacting the Asian markets at present. The stock futures are little change ahead of key November jobs report. The Dow Jones did trade with an up move of around 60 points and closed with a green signal. However, S&P 500 also closed with a green signal, and the technology-heavy index Nasdaq closed with an up move of around 200 points. So positive cues coming in from the US markets. Talking about the energy pack, oil prices are ahead of weekly decline on signs of weakened Asian demand. At present, we see Brent crude trading near about $75 a barrel, and natural gas is showing signs of concern. Talking about the bullion market, gold firms as dollar dips ahead of US payrolls report. We do see that in the global markets as well as in the domestic markets, there is some sort of volatility in the precious metals, particularly gold and silver. So this is how the trade setup for the global market looks like, as we see the Asian markets are trading with mixed signals. The US markets did show signs of positivity, and of course the GIFT Nifty has given a positive start. Let us now take a look at the trade setup for domestic markets for today's session. The Friday session, the last day of the week, and taking the cues from the yesterday close, the markets finally entered into consolidation mode and saw profit booking on December 7th after significant upward journey in previous 7 straight sessions. Hence, the said consolidation may continue for some more days with major support at 20,700 to 20,500 area, as long as the Nifty 50 trades below the psychological 21,000 mark. But in case the index sees sharp up move above 21,000 mark, then another phase of up northward journey may be seen. In the yesterday's session, Sensex declined around 132 points to close at 69,522, while the Nifty 50 fell around 40 points to close at 20,901, forming clearly bearish patterns during the session. And there was a lot of volatility, of course, because of the weekly expiry, which was anticipated as well. This pattern indicates a breather pattern for the market post sharp up moves. We have seen market witness and show a lot of action, and now a small breather is something which has been seen, and technically this kind of a breather is anticipated as well. After moving up sharply, the market is not willing to show any significant reversal on the downside. Itself is a positive indication for the markets ahead. Such market actions are more often seen during strong trended up moves. Hence, there are chances and possibilities of some more consolidation or minor weakness in the next 1 or 2 sessions before resuming decisive up move again. The immediate resistance is placed at 20,950 levels, and an upside breakout could open the next upside target of 21,550. Immediate support is at 20,830. The broader markets gained a bit of strength compared to consolidation in the past 2 days, with the Nifty Mid Cap 100 and Small Cap 100 indices rising 0.6% of 0.4% respectively on positive breadth. About 1,193 shares advanced against declining of 933 shares on the NSE. Again, the volatility index India Wix also trended lower, snapping a 3-day up move and closing 7.76% lower at 12.67 levels, which provided some support to the market. So considering all of these factors, let's now take a look at the key support and resistance levels for both Nifty and Bank Nifty. Taking a look at Nifty, Nifty is likely to see immediate resistance at 20,932, followed by 20,954 and 20,988, while on the lower side it can take support at 20,863, followed by 20,842 and 20,807 levels. For Bank Nifty, in yesterday's session, the Bank Nifty saw good recovery of more than 300 points from day's low and closed with 7 points gain at 46,841, which was clearly forming bullish candlestick pattern with a long lower shadow and minor upper shadow on the daily scale, which indicated good support based buying. The Bank Nifty might consolidate over the next few trading sessions, and the range of consolidation is likely to be 46,400 to 47,300. Overall, the trend is still positive and dips towards the support zone of 46,600 to 46,500 should be used as an opportunity to go long. The index is expected to see resistance at 46,919, followed by 47,017 and 47,179, while on the lower side it may take support at 46,598, followed by 46,499 and 46,338. So these are all the important support and resistance levels which one needs to consider for the trading session today. Let us now take a look at the stocks and news for this trading session. We start with Electra Green Tech, as the electric bus manufacturer has received letter of award from Vasai Virar City Municipal Corporation, Mumbai for supply and maintenance of 40 electric buses. This order for supply of 40 electric buses is on outright sale basis, which shall be delivered over the period of 7 months. Value of these 40 electric buses supply would be Rs 63 crore. The next stock in focus would be Ircon International. The Government of India has decided to exercise the green shoe option in the offer for sale issue of Ircon International, launched on 7th of December, and hence will sell additional 7% stake in the OFS. The OFS issue, which opened for non-retail investors on 7th of December, was subscribed 4.6 times the base issue size. The OFS will open for retail investors on 8th of December. The next stock in the list is Container Corporation of India, Concor, where Concor and NTPC Vidyut Vyapar Nigam have signed a memorandum of understanding for setting up PV solar renewable energy projects in Concor terminals. And last but not the least, GlaxoSmithKline Pharmaceuticals. The company has established an omni-channel team to expand its reach and coverage to the target segments by leveraging technology and improving productivity. Continuing its focus on improving operating efficiencies, it has also completed the voluntary retirement scheme for commercial function employees in field sales and HO, and spent around 157 crore as the one-off cost of the VRS. So these are all the important stocks which will be in focus today on the back of news flow. Taking a look at the FIs and DIs data, the FIs, foreign institutional investors, net offloaded shares worth Rs 1,564 crore, while domestic institutional investors sold 9.6 crore worth of stocks on 7th of December. So this is how the trade setup for today looks like. With this, we come to the wrap of our podcast for today. To sum it up, there's a lot happening in the markets, but also don't forget that the global markets are not supporting as much as they should. However, the domestic market has its own zeal and a sort of up move which we always see. But definitely there are economic indicative actions also which one needs to consider. Nevertheless, irrespective of market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.